Hey everyone, welcome back to Corporate Decoder. Today's report is from FlexShares Trust, and let's just say after looking at this, someone might need a trust to help sort through all these funds, wink wink. So what's the scoop? We're diving into a certified shareholder report covering everything from bond funds to global infrastructure. It's a treasure trove of financial details, so let's break it down. Remember to hit that subscribe button and join our Discord channel for more insights. The link is in the description. First, a quick overview. This document is filed with the SEC, so it has all the information about the FlexShares Trust that they are sharing with the shareholders to comply with the law. It talks about reports to the stockholders, the certified shareholder report, and most importantly, how their financials are looking. Okay, let's dive into it. We're looking at the FlexShares Trust and all its various funds. They've got bond funds, equity funds, and even funds that allocate across different asset classes. It's a lot, but we'll try to keep it simple by focusing on the portfolio and financial highlights. The FlexShares Trust, a registered management investment company, made filings with the SEC, including certified shareholder reports, copies of semi-annual reports, and certifications from officers. We get a copy of the report that went out to shareholders. Basically, it's their report card. It includes semi-annual report with information about key fund statistics, top holdings, and even QR codes to find more information. It provides the required copy of the shareholder report, so that's neat. Let's quickly look at a fund and then dive into the financial statements to get some raw numbers. Alright, let's look at the FlexShares Core Select Bond Fund. It says right here that this report contains important information about the fund. This report describes changes to the fund that occurred from November to April of 2025. Here's something interesting to look at. What were the fund costs for the last 6 months? So if you invested $10,000, the costs were only 4 to 1. That is a percentage of only 0 to 50%. That's basically nothing. Alright, some key fund statistics. The net assets are $131,284,322, and that was great. Now what I really want to get to is looking at the financials for all of these. I'm just going to scroll down. A big part of this report is the financial statements. There's a big table of contents here. Let's jump into the financials themselves to see what we can decipher. Okay, this gets more meaty. Here's the statement of assets and liabilities. They line up a bunch of funds side by side here to compare, which is awesome. Let's look closer though. For the FlexShares Oz Quality Low Volatility Index Fund, they've got securities valued at over $128 million. Not bad. Paid-in capital makes up the bulk of their net assets. The FlexShares Developed Markets ex-US Quality Low Volatility Index Fund is sporting over $51 million in securities. Then we have the FlexShares Emerging Markets Quality Low Volatility Index Fund. It has less than the others with about $12 million in such securities. Now, look at this. The FlexShares Morningstar US Market Factor Tilt Index Fund, a whopping 1,577,719,1923 in securities. It absolutely dwarfs its peers. Crazy, huge increase in the amount of earnings. Like, wow, definitely need to investigate further. Now, right after the assets and liabilities statements, we have the statements of operations. I'm scrolling down to it. Let's get into investment income and expenses to see how these funds are really performing. Now, a lot of these funds are producing net investment income. Check out the Morningstar Market Factor Fund netting over $11 million. It's a huge number. Some realized big gains and had very volatile, unrealized appreciations. Effective expense reimbursements and fee waivers all around, but it's not all sunshine and roses. Across the board, you see accumulated losses eating into paid-in capital. FlexShares still has to deal with the market volatility. Some of these funds hold international assets by country. The Developed Markets ex-US Quality Low Volatility Index Fund is heavy in Japan at 19.1%, then Canada and Switzerland. And the Emerging Markets Quality Low Volatility Index Fund is rocking India at 24.3% and China at 21.2%. A bunch of these funds also reduce the management fee rate the fund pays to its investment advisor. That could save investors some money in the long run. The ESG and Climate US Large Cap Core Index Fund shows the asset market sector breakdown XDEX percented. Pretty interesting. For the ESG funds in general, seems like costs are very, very low. For a $10,000 investment, hovering around 5, pretty based actually. For them, we see a different market sector composition that's information technology, subs financials, healthcare, and so on. This section really shows that they are following the market with just an ESG coat of paint. They do not want to go too far out of following the index. Now, giving my 2 cents here, it seems like FlexShares is trying to walk a tightrope, offering both niche factor-based ETFs and catering to the growing demand for ESG investments. The changes in fee structure and investment strategies make sense in that context. And it's interesting that while some funds are cutting fees and investing in new instruments, they must be very sensitive to price competition out there. Overall, while some of their smaller funds seem to struggle for traction, I'm looking at you real assets fund. Core products are humming along, but wow, things are super concentrated at the top. Morningstar US Market Fund has almost 4x the assets of the next largest. If these trends continue, I think FlexShares should consider consolidating its offerings to cut costs and focus on its biggest strengths. But it's their call, and it does not look like they are losing money here. A word on fees. You see NTI is contractually limited and agrees to reimburse applicable expense to keep percentages stable. This might make their numbers look artificially good, but there is no risk since this is a contract. And the changes about mortgage-backed securities, T-bills are things you would expect bond funds to shift their assets to, but will always depend on outside factors. What a monster of a document. Wow, lol. Alright, that's our deep dive into FlexShares' latest report. What's your take? Did any of these funds catch your eye? Let me know in the comments, and don't forget to like this video and subscribe. And lastly, join our community in Discord to geek out about corporate financials. Thank you, and see you next time.